Hello, traders. FX Pip Collector here. Today is Tuesday, February 18th, and this is my morning video where I like to take a look at all the US dollar pairs, including gold, and we also take a look at a couple of the JPY pairs. If you haven't done so already, definitely check out my free Discord trading community. The link for that is at the end of this video in the corner and in the description of this video. If you'd like to get access to all the membership benefits, you do so by signing up at my website FXPipCollector.com gets you access to all these benefits listed below and more. So, anyways, I always like to start off by looking at the calendar for the day, the news calendar. We have a lot of news coming out this week for sure. But today, the most important thing is today, obviously, and all this other news has already happened. So now we have the Canadian news to keep an eye out for. We have the Canadian CPI news, which is definitely a pretty big news event. And then for the US, we have this Empire State Manufacturing. So New York manufacturing, probably not that big of a deal. The bigger news event today is definitely this Canadian CPI news. So keep an eye on any Canadian pairs that you may be in or may be thinking about getting in. So, anyways, I always like to also start off by looking at the US dollar index. Now, the US dollar has been going down for quite some time now. It definitely could be the end of a wave B. And it definitely may just keep on going down and make a big old giant wave C, like I've been talking about on the weekly time frame. A, B, down for a big old wave C. But we have to keep in mind that really there's not much proof that it is doing that. Yes, we do have a breaker structure, but that breaker structure only proves to me that this wave right here is over. Now, I definitely hope this continues down and blows right past all those Fibonacci levels and just keeps on going down in a big old downtrend. But we have to keep in mind that this could be a wave A right here, this could be a wave B, and this could be a 1, 2, 3, 4, 5 of C. So if we do see five ways down to a Fibonacci level and then a breaker structure to the upside, we definitely better shift our analysis to say that this is actually going to go back up again. If we get just a normal, Fibonacci bounce, no breaker structure, and it just keeps on going down and blows past all these Fibonacci levels, then we're going to know for sure that this wave B really is over. And if you know what's going on the dollar index, you basically know what to do on every single one of these dollar pairs. The dollar index analysis is such an important analysis. So, anyways, moving on to the euro dollar, because of what I just told you on the US dollar index, that applies to every single one of these US dollar pairs. I'm hoping that this is a wave one, this is a wave two, and we're in a wave three. This is over the next weeks and months. Going to keep on making higher highs, higher lows on these higher time frames. But we cannot neglect the idea that this could just be another ABC correction and that it could end up doing something like this, breaking structure and continuing the downtrend. The most important thing right now is that the trend is not over, and I definitely do not think the trend is over. I would expect it to go up more either scenario. So right now, definitely would recommend longs on shorter time frames. Going down to the 1 hour time frame, we are obviously in a correction, I would say. We definitely do have a move to the downside. Yesterday was a bank holiday, so it was a pretty slow day. This move down is kind of a five-wave move, as you can see. So maybe we'll end up doing something like this for like an A, a B, and a C correction. Maybe it's down to like the 38 or the 50%. Because we have to remember, if this is a wave three, then we should have very shallow corrections. Only like 38, 50%, and then continue the uptrend. So I personally am not trading the very short time frame, so I wouldn't recommend looking for shorts. And it may not even end up playing out like this. It may just keep on trending up. I would recommend, even if you do trade the shorter time frames, to focus on looking for longs at the end of three-way pullbacks and nice Fibonacci bounces. I'm hoping that it does something like this over the next day or so we can get a nice long opportunity, hopefully at one of the big news events that we have later on this week. So moving on to the pound dollar. Pound dollar is sitting at the 100% Fibonacci extension of this first wave. So we got our Fibonacci extension from here to here, projected off of here. We're currently at the 100%. If this really is a 1, a 2, and a 3, then I would expect it to go up to at least a 161%, which would probably take out this high right here. So just like the other dollar pairs, there's always a chance that this does do something like this, break structure, and continue the downtrend. If it does do that, I think we should be able to recognize that and we should be able to get short. But either scenario, the trend is up right now. Even if it is a wave C, I definitely don't see any signs of it being over. So taking it down to the 1 hour time frame. Very slow day yesterday. It looks like a possible wave A. It looks like possibly three waves up for B. I would say that there's a good chance it probably is going to drift down more for wave C, but I definitely wouldn't recommend going short. And the reason, even though I have this drawn out like this, if this really is a wave three, it may not even make a proper wave C. It may just keep on going up and up and up and up, which is why I will not be going short, and I wouldn't recommend going short. I would recommend going long at the end of any three-way pullbacks I see, but I would be very, very, very cautious about thinking that this is the end of anything and that this is actually going to go down in any significant way. If it's a wave three, then it's going to make very shallow corrections and just keep on going up. If it's a wave C, it possibly could do something like this, respect 100%, go down, break structure in a big way, which would definitely turn me back into a seller. But since we don't have that picture, I am definitely looking for longs in an uptrend. Moving on to the Aussie dollar. Now, the Aussie dollar to me does not look like a wave C at all. It looks like this is the end of a trend. It looks like we have a break of structure. It looks like we're starting a brand new uptrend, which on the higher time frames should make higher highs, higher lows. I personally think there's a good chance that this is the end of a wave X of a WXY pattern, which means on this weekly, monthly time frame, we potentially should make three waves up for a wave Y, which would take out the high of wave W. So it definitely seems to me like we have a real turn on the Aussie dollar. And you're not going to get a real turn on the Aussie dollar and not get a real turn on the other pairs also. To just keep that in mind. We are at a Fibonacci level. Maybe this will be an area of resistance. Maybe not. I mean, it could just keep on going. If it is an area of resistance, that's good because if it goes down, that should give us more opportunities to go long again at the end of any pullbacks we see on shorter time frames. Taking it down to the 1 hour time frame, it kind of almost looks to me like it's trying to make five waves up. It kind of looks like a wave one, wave two. This is all a wave three right here from there up. Maybe this is an ABC of four. Maybe we're attempting to make a wave five. Most wave fives do take out the high of wave three, but you do get truncated wave fives, meaning lower low wave fives. So there is definitely a chance it does make a lower low, lower high that is, and push down. After we get a break of structure, normally we do get a pretty decent pullback. So I'm hoping to see some pullbacks on these dollar pairs this week so we can go long, maybe in a day or two in a big wave for possibly a nice swing trade for the continuation of a big uptrend. So yeah, if this really is a wave five, it probably is going to drift up a little more. But if it is a wave five, it'll probably reverse, go down, break structure. Then I will throw my Fibonacci retracement on the whole move, and I'll look for three waves down. Fibonacci bounces to go long for the continuation of the uptrend. So Kiwi dollar, exactly the same analysis as the Aussie dollar. If this really is a 1, 2, 3, then it should just keep on going and going and going. Most likely it is a 1, 2, 3 because this looks like a nice five-wave downtrend with a break of structure. So more than likely it is just going to keep on going up. Same analysis as the Aussie dollar. That's why I don't really cover it. US dollar Canadian definitely did break structure and hold below structure. That to me proves that this whole uptrend is over. If that whole uptrend right there is over, then that means that we are likely starting a wave Y on the monthly time frame, which would probably over the next year or so end up looking like this for an a B, and a C of wave Y. So we potentially have a very, very, very significant turn to the downside on the US dollar CAD. So if that's true, we definitely need to be looking for pullback entries every single chance we get on these shorter time frames. So going down to the 1 hour time frame, I got my Fibonacci retracement on the last series of lower lows, lower highs on the 1 hour because we definitely do have a break of structure. I'm hoping to see a little bit of a bigger pullback, maybe a 38 or a 50%. If we go up to the 50 or the 61%, then this bottom could become a top. So that would be a really nice opportunity if it went up to like the 50 to 61%, made it a positive down, made a break of structure, and then possibly continued the downtrend from there. Now, I personally wouldn't recommend looking for logs. I know most people don't really care, but the trend is your friend, and I do trade in only one direction. Now that we have a break of structure to the downside on the daily, I'm only looking for shorts. I will ignore any opportunities to the upside. I'll wait patiently for another sorting opportunity. I trade, 30 some odd pairs, like 34 pairs. So I'm okay waiting for a few days on a couple pairs for a good trading opportunity. So anyways, moving on to the US dollar Swiss. US dollar Swiss is a little different than the other dollar pairs because the Swiss, it's hard to know whether this wave up is really over or not. It really is no break of structure whatsoever. We have a break right here, but it's a lower high, so I wouldn't say that that's a real break of structure. So the trend definitely could still be up. This definitely could still be an ABC correction. So if we do get like a nice fib bounce, a nice break of structure, then that probably would be an ABC. That probably would continue the uptrend. If we don't, then it just goes down, bounces, doesn't break, doesn't break, doesn't break, just keeps on going down with lower lows, lower highs, and just continue to look for sorts. I definitely am looking for sorts right now. Going down to the sort of time frames, I mean, I would assume that this is an A and that this is actually like an expanding flat for a wave B. Excuse me, and then we potentially are going to go up for a wave C. I definitely would be looking for sorts. I would not be going long because even though it looks like it's to do this, the trend is down. It does not have to do it like this. It potentially could just do this and go down. That's why I will not be going long. I would be looking for sorts. If it does do this, I would make for a really nice sorting opportunity. But whether or not it really is going to push up and make a more proper looking ABC correction is still the question. Excuse me. Sorry, I've been fighting a little bit of a cold. So, anyways, I definitely would recommend looking for sorts in a downtrend. Now, gold is in a big giant wave three, and I think the best target now for this wave three is actually the 261, which is right around the $3,000 an ounce. I think this is going to end up pushing up to that level. It doesn't have to push up all at once, so it could make pullbacks in sort of time frames, but I'm definitely still very bullish. The daily time frame is looking really good for the correctly tuned time frame for the high low series. We definitely don't have a break of structure. I would definitely think that this is more than likely just going to keep on trending up, at least to around that $3,000 an ounce area. Going down to the 1 hour time frame now, it looks to me like we're going to possibly make more of a complex correction. It looks like a possible 1, 2, 3 down, maybe like a W, 1, 2, 3 up, maybe like an X, and then this is going to be like 1, 2, 3 down for like a wave Y. I think we're going to make a WXY pattern, and then we're going to go up towards that $3,000 an ounce area. So what I have now is I have my Fibonacci retracement on this move down. If we get a fib bounce, if we get a nice push down, a little break of structure, then it's probably going to make a five-way move to the downside for a wave C of wave Y. But the more important trade that I would be keeping an eye out for is the end of this wave C of Y for a long for the continuation of the uptrend. So moving down to the US dollar yen. I personally think all the yen pairs are still in a downtrend. I think that we're going down it for a wave C and then we have a lots and lots of downside potential. That doesn't mean that there couldn't be some pretty significant rallies on the sort of time phase, but overall, I am definitely very bearish on all the yen pairs right now. So going down to the 1 hour time frame, I got my Fibonacci retracement on the last push down. Boy, it looks like it's respecting the 23%, but I think more than likely that move down is going to be a crutch, and I think it's probably going to do something like this, probably go up to like the 38%, then probably end up pushing down. I would recommend looking for shorts. I have no idea whether it's really going to push up and make this wave C. It possibly actually could just keep on going down from here. But if it does make an ABC correction, that would make for a very nice little entry to go short for the continuation of the downtrend. So I would recommend looking for shorts in a downtrend on basically every single yen pair. Going to the euro yen, just like the other ones, I think we're in a wave C to the downside. My target is right around the 145 area for this wave C of wave 4. So I'm definitely very bearish. Now we definitely did have a pretty strong move to the upside, but it wasn't able to break and hold structure, telling me that the trend is still down and it probably will continue to trend down. As long as it doesn't break and hold above this structure, I'm definitely still looking for shorts. Going down to the 1 hour time frame. Now this move up right here is definitely a trend. And lots of the times when you see a trend like that, you'd be like, oh, that's an A, and this is a B, and it's going to go up again for a C, and you would be waiting for something like this to go short. But the problem is if this really is trending down on the much higher time phase, even though you would think that this is what would happen, more than likely it's not going to play out like that. More than likely this is like a modal wave correction, and this is going to go down and down and down, making lower lows, lower highs, which is why I would recommend looking for shorts on every single one of the yen pairs. Wow, yeah, yen's definitely pushing down. So same thing on the pound yen. Now, if you go all the way up to the weekly time frame, I think we're in a wave C. My target is right around the 171.8 area. So we're at the 191 right now. So lots and lots of downside potential on the yen pairs. We made a big push up, but no bigger structure. There's a good chance that this could just push, making lower lows, lower highs. If it breaks structure, then fine, I'll start looking for longs. If it doesn't break structure, I'll keep looking for shorts at the end of every pullback I see. So going down to the sort of time phase, man, it looks like we had a nice sorting opportunity right here already today. That's probably an A, that's probably a B, that's probably a C, that's probably just going to keep going. Now, this is the same thing as the euro yen. You would look at this and you would say, okay, well, this is an uptrend. That's an A. You would be like, oh, this is a B. And you would be like, this is going to bounce from a fib level and go up and make a C. But the problem is when the trend is down on the much higher time frames, it's more than likely just going to go down and keep going down, which is why I wouldn't recommend trying to go long catching a wave C to the upside, because more than likely this move up right here is like a motor wave correction, and more than likely it's just going to keep on going down, making those lower lows and lower highs, in my opinion. So I would definitely recommend looking for shorts at the end of any pullback you see. Looks like we had a nice short this morning already. This is more than likely actually being caused by the pound news. We had Bailey from the Bank of England speaking this morning, so that's probably more than likely a pound move that is going on right now. But either way, looking for shorts in a downtrend on all the yen pairs. So, anyways, don't forget to join my free Discord channel, link down here in the corner. And as always, thank you for watching and happy trading.